Good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Tuesday, the 7th of June, 2022. I can't wait for the basketball playoffs. What a great game series so far. In any case, interesting day today. It's like the summer days. You're down early, you come up late, you start off strong on a different day, you drop back. It's getting to be rather strange. I was watching on Bloomberg as they were commenting that more money's been made for the past 30 days. I think that what they were saying, was if you went long or short on the close, and I think it was long on the close and then out on the open, more money than trying to trade it during the day. Probably there's some reality to it because we're just not getting the follow through. I wish I had listened a little bit more, but the point was the market's a little bit out of whack, but it's summertime. We're looking to see what the government's going to do. What's inflation doing? Are you noticing how many stories you're starting to get on the financial news wires of talk about inflation peaking in different parts? Today I'm reading about it in fertilizer. The other day I was reading about it in freight. Now I'm also hearing that the rail union workers are about to go on a 3-day strike, both here and again in London. And we are talking 50,000, if the numbers were right that I was reading, are going to go out for 3 days. You know what they want. They want more money. That's the inflation pressure again coming. I'm not saying they don't deserve it, but everybody wants more money. I know in Illinois, our wages go up today, the minimum wage in Illinois for companies of a certain size. So inflation pressures are being felt everywhere. Bonds and notes, I'll stick with what I know. I don't want to get friendly this market. In other words, thinking we're going to get lower rates in front of the Fed meeting. I think it's the opposite way. Energies, they tried to break the gasoline today. I think it offered a buying opportunity. I came out and told my clientele that at midday today, and it came back nicely. Not running yet, but it was around 410 then. It's a lot higher than that right now. As I come to the S&P, we are still underneath the 18-day average. And I want to stop here for 1 second. This is a weekly chart. All of the weekly charts in the stock indices, prices are under them. It is a potential target in markets that turn down sharply to get back to that number. The word is potential. It does not have to go there. But if you're going to get short covering rallies, and people have asked me, how do I think it's a bear market? Well, the way I teach charting, you were near 4,800, you went down to near 3,800. It's a bear market, my friend. I mean, you might hang in and say, oh, Ira, it wasn't exactly down 20% in some market. Does it have to be? It's a rule of thumb. How many stocks are down versus up? How many stocks are up for the year versus down? Take a look at those ratios. Tell me what you've got at this point in time. So suffice to say, generalities, okay? I do believe we're in a bear market, and I think we're in one for a long time. Frankly, I think we're in stagflation. So that's unfortunately where I think we're going to be for a while. When I look at the S&P 500, sideways action, certainly off these lows. Let's give the market some kudos. It did get away from those lows. However, you've now taken the selling pressure off the market. When does it start again is what gets me scared. When I'm looking at the chart action, higher lows, sort of a stall finally happening here. If I take a look at this to just give you an idea, if we come, let's see how many of these I can get going. There we go. I'm just learning how to work my new toy, which is this. I have to go just a certain speed. We were at 42.02 in a quarter right there, as you can see. The rally back up here, and you'll get to this, was 41.89 and slipping back. We haven't taken out this low. The pattern, and that's what I wanted to show you, is lower highs, actually higher lows. It's not a pretty pattern to trade at this time. I see the market just drifting around here, doing not an awful lot one way or the other. In terms of moving averages, we have the 200, the 100, and the 18. So the market has been able, after a monstrous break in the month of May, to get back for a good part of the end of May, the very last week in early June, over the 18-day average. But it's got a big resistance point right here of the Bollinger Band, and that number's 42.35. So I see a big hard numbers for this market to just keep climbing through. Could it do it? Anything can happen. Do I see it happening? No. Do I think the pros will come out of any longs they've accumulated if they get up to 42.35 again? Yes. Gives you my answer. Why? Because you're overbought. You don't have a bullish embedded reading. You haven't built one yet. Overbought markets hitting Bollinger Bands. The pros write their algorithms, their sophisticated systems. They go, hey, we've used buying power. We're up to resistance. I don't care if we're bullish. We step away. NASDAQ, same thing. You got up there, you backed away. I'm not bearish here as long as you're over the 18-day average. Not going to happen. But I'm also saying it's hard to buy when you're overbought because you've used in the tank a lot of your energy. It's like push to pass. If you ever watch what they do on Indy racing, you know, they only get so many minutes of the push to pass. And if you use them up, you have nowhere to go. Well, think of it that way. That's what's going on. Then we get over to the Dow. And in the Dow, the pattern starts changing. What's happening here is this market, and I'll come back another day, both numbers over 80 for the first day yesterday. Okay? The market then today comes back, both numbers over 80. So if you can get 3 in a row and you're working on that, you embed. If you embed, that push to pass has suddenly gotten full again. So the guys in the control booth push their buttons. My car's got more time in it. I'm going to get that extra 30 horsepower. I'm going to pass you. It's that simple. And that gives this the opportunity, maybe it can come up here and get up to that 100-day average in that number if it embeds. It's also the most overbought right now, and the Russell is in the same position. I won't go back on each one, but it's doing the same, and this is the resistance. So, do I want to be bearish here? Absolutely not. I'd rather get bullish and be able to play the bull side in a bear market for an abbreviated time than anything else. So yes, as a trader, do I really care if I'm bullish, bearish, sideways? No. I want to know where the opportunity lies, and that's what you're trying to catch. Remember, trading is different than investing. Please do not mix the two. They are not the same. In the VIX, if you get down here to 2302, 2286, I think the pros are going to write puts, looking to get back to the 26.56 area. They'll try to catch $2, $3 as the market eventually gives you the bounce back. That's what I expect them to do. When we come to the bond market, I don't want to be pushing the bear side, Fed or no Fed. The odds of staying under a Bollinger Band, 5% of the time. I'm not crazy. I want to own the casino. I don't want to be the guy. I want you to come in and play my game. I'm going to get 95% of the time, you being all of you out there. I'm going to walk away with a certain percentage of your money every single year. It's that simple. You may beat me this hour. You might beat me today as a business. Not you being all of you. You won't beat the casino longer term. The odds are against you. It's that simple. The math comes into play. That's like betting against the Bollinger Band. You sell under it all you want. I want to be the guy taking the other side of your position because it's going to pop back over that number more times than it isn't. 10-year notes, same thing. So you've basically gone from lower to higher Bollinger Bands in a downtrend. A lot of bear news in front of you. The Fed isn't going to come out and say, we think things are so good, while we're cutting and going to have to raise interest rates 50 basis points, we might cut back in July. Do you think they're going to say that? Do you honestly think there's a chance of that? So I don't think that that's the way. I think it's the bear side, but the market's hit its target. Let it get away from that. Let it either embed or work this situation off, or you don't play. I mean, there's plenty of opportunities elsewhere. In the dollar index, what do you do the first time after you get a big rally off a low and Bollinger Band to the 18-day average? You typically fail. The word is typically. Can you go straight from a top number to a lower number? You can. Don't get me wrong. But you typically don't. And charting is like reading leaves, all right? You're playing what's typical. What are the patterns? Any chartist that tells you this thing works all the time, run. Don't walk away from that person. They have no concept of what they're talking about. In the eurocurrency, backing off. You had an embedded reading, you're losing it. Okay, and was it embedded? Let's make sure. So we can come back together here. I'm getting so much better at this. I'm getting proud of myself. So both numbers were over 80, nope, but over 80, nope, never did embed. It looks like it, but this chart didn't, and that's what I wanted to be able to show. I was looking at that myself going, did it embed? And first I thought it did. It's working off an overbought condition. It doesn't even have to get down there, but it also means any buy signals, it's going to be difficult to take them because you've already used that push to pass in your tank. In the British pound, wow. So Boris Johnson survives, you get an outside day up. If you don't take out this low, the odds still favor you going back to the Bollinger Band. So that's the key over the next 48 hours. Do I think the market is a buy? What's the slow stochastic numbers? Are they over 70? Overbought. Your push to pass is gone. No. Bitcoin, look at how it's stuck in here. I'm watching the announcers on TV. They're having a ball with this today because the market got back under 30,000 and they're going, is this it? Is it going to fall apart? Then it's here. It's caught. Let it come out of that sideways action before you make any decisions. 2 senators have come up with a plan for regulation between the SEC and the CFTC on how to regulate these digital coins and what parts of it will go to the SEC and what will stay with the CFTC. It's a good step. It's the maturity of this market if it's going to survive. I said if it's going to survive. In Brent versus WTI crude, you're over the 18-day average. Okay, when you're over the 18-day average, what do I think you do? It typically means that the Brent is going to gain on the WTI. That's all that it means. Now, when you come to the energies, my eye goes right off the bat. I'm embedded. I want to be a buyer on days like today or other days when you're breaking down, looking for the buy to try to get the pop back in the market. Same in the WTI. Let the red line get under 79. I will be a turncoat instantly. No, I'm no longer bullish at that point. Right now, that's it. Gasoline, to me, this was the break to buy today. Doesn't mean I'm going to be right on it. If you get the red number under 79 on a close, it's 3 points away from it. Well, then I got to tell my clients to bail. Otherwise, why not get back to the 432 area? I'm looking at that. Natural gas, you know the news in Texas. It's hot. 100-degree weather. Is it going to be so bad where the grid goes down? Will the grid make it? What's the demand going to be for natural gas and other products to operate and get electricity? That's what you're looking at. Now, 100-degree weather is starting to move across the U.S. I told you, once that air conditioning need picks up, it's going to pop on you. It happens every year. This is no different than other years. So when it happens, be ready for it. The chart is certainly in the bull camp at this point in time, and it is something I like to watch and see just what's going to go on with. So as I'm looking, and we're talking our research here, one of the things that I love about what we do is we put together so much of this for you. I spent today 15 minutes listening to the grain reports in weather today, and our meteorologists, we have in-house meteorologists, giving us the briefing on what Texas is going to look like and all that. Do you have anything like that? By the way, it's in our charting service. We also can email you these recordings. There's so much that we do with it all. You get that. That's what our traders come to us for. We offer things other people don't. We have actually 2 meteorologists that do all this for us. So we put that together. We talk to you charts, spreads, option plays, the futures markets. I specialize, as you know, in this type of charting that I present to you, and I present it in a way that makes it, I think, easy for everybody to see. So when you look at all this, it's pretty simple. All that I recommend you do is go to our website, www.iraepstein.com, under free offers, or better yet, follow my finger with your cursor, come right up to the top, an icon will appear, click on it, you'll be in the free offer section. I'm Ira. You have yourself a great day. Thanks for watching, and I'll see you tomorrow.